Good afternoon, everyone. Good morning if you're just getting up in North America, or if you're in Asia, good evening. Hope you're well. If you're in Africa, say good day to you. Good afternoon. Hope you're all well. It's where are we? We are Tuesday, 17th of June. I don't hear my big daft dog barking downstairs or something set him off. So apologies for that if you can hear him barking. But anyway, we starting with gold today. Gold pivoted back to the high on yesterday that we got to on Friday from following the attack by Israel on Iran. But since then, yesterday morning into the start of the European session, we've been under the 20-hour moving average, and we continue to decline. Yesterday, big move down here at the US Open yesterday into 3385, and that's been our support so far today. Previous resistance at 3385 over here on Thursday last week through to Friday last week. So hourly support around about where we are now, but the trend remains to the downside here on gold over the last couple of days, as obviously chatter yesterday increased about the Iranians asking for the Omanis and the Qataris to try and talk to a ceasefire. Obviously, the spike you would have thought we'd had in gold this morning when Trump left the G7 meeting early, citing obviously the situation in the Middle East. And also that people should leave Tehran. That's been taken as quite a panic measure in Iran itself. I know people in the city that are trying to get out. But fuel shortages, food shortages in that city. Same in Tel Aviv. Sorry, not the same in Tel Aviv, obviously, but civilian casualties on both sides, 244 in Iran, and I think it's 44 last count, 24, sorry, last count in Israel. Anyway, gold continues to trend to the downside, basically, on the hourly time frame. The daily time frame remains very still quite robust. Obviously, big down day yesterday, and we're down again today. But the big support, the 50-day moving average, is now at this big round number 3,300. Is the big higher time frame, longer term support. The 20-day moving average now sits at 3,340, or just shy of 3,340. So they're the two big lines in the sand. The trend remains bid, all-time high. From April, just shy of that 3,500 level remains the upside target for gold bugs, even with this flattening of the move higher. So we'll see if we get any more. It didn't really get a safe haven bid, gold, on Friday's perhaps as much as you might have thought after the news of the initial attack from Iran, and it was all sold off yesterday. So we got a bit of an engulfing I don't know if you can see that on the chart. Let me just make that a wee bit bigger. There, you got this quite engulfing negative candle yesterday, cutting out this steady old 3-day rally to the upside for gold. So we'll see where it goes from here, but it remains bid, I say, at the higher time frame, flattening out here of the MACD and signal line, flattening out the RSI at 56. So it's had a fantastic, tremendous run, gold, and still remains bid on these higher timeframes. So what does today bring? Well, yesterday we saw the Empire State missing quite significantly yesterday. It didn't have a particular big move. This morning, Bank of Japan universally, all members voted to keep rates unchanged. There was one dissenter when it came to the big relative surprise, this change in their QT, this quantitative tightening. They were going to reduce the amount of long-term bonds that, or JGBs, as they're known as Japanese government bonds, JGBs, that they're looking to offload. So obviously massive debt for all central banks, Japan being a particular one. Obviously hugely influential, third biggest individual country when it comes to economy, and massive obviously exporter. So the weak yen has helped their exports, obviously, but unfortunately a weak yen means imports are expensive. With the spike in the oil price and Japan's move away from nuclear power after the earthquake a decade or so ago, that becomes a bit of a conundrum. So talk of spiking inflation in Japan remains the policy that the central bank needs to get a head around about where they are starting to or not starting to move rates. So if you see here, Japan, one of the lowest rates in the big developed economies at less than half of 1%, and it's all about those long-term bonds or Japanese government bonds that has caused all the friction. In his press conference this morning, the Udea just maintained a straight bat, as we say in England, with regard to ongoing policy. Did question the this worry about inflation. Inflation running at 3% and a bit, obviously significantly above the 2% target, 3.5%, I think it was, moving up, and particularly in the Tokyo region as well. So key move. So we had a move against the yen initially, but the yen's come back from that initial move against it earlier on this morning. Big surprise out of Germany was the ZEW spiking to 47.5 from a lowly 25.2. So more positive vibes out of in Germany. Obviously, manufacturing remains in contraction in Germany. So if we look at the ZEW again, it's another one of those sentiment indicators. So it can move around quite a bit, but we've had the second consecutive month of beating expectations. We had that negative turn in April as the tariffs were, the announcement that the tariffs were just kicked in. But excuse me, I made a fatal mistake of eating a crisp bread before I came on, and I can feel a little bit stuck in my throat here. Sorry. So we had a negative month, as I say, here in April, but as you can see, generally, surprisingly, we've had a positive sentiment out of Germany's ZEW, and a big surprise to the upside this month. But as we saw in April, will we see that as we go into the summer, as the tariffs or the deal, or is there a deal with Europe or not a deal with Europe, bite? And we'll see if we this looks like an outlier at the moment, the April number. So let's see how we go forward. Obviously, we'd like to see, or certainly the German Chancellor, Mr. Merz, would like to see us back to the 60-70 level. But yeah, big surprise to the upside, lifted the DAX and the euro tad this morning, but the dollar's come back a wee bit stronger. Main data today is the one that's coming up in a couple of minutes. We've got the retail sales numbers out of Germany, out of the United States. The core number pivoting around is 0.2, 0.1 per month, as it has done for many months. Retail sales used to be on a Friday. They used to be much more market significant than perhaps they are these days, but still a key high impact red calendar note. If we look on our calendar here, you can see there's a lot more in the in the detail. So export prices, import prices, retail control prices. Well, all of that will come across the terminals in a minute or two. So watch that. So where are we? So if we just drill down to gold, as we say, gold's pivoting around this 33.85 area, and it still remains in its downtrend. If we look at the main crosses, the euro currently 115.70 or 115.67. So again, that ZEW data this morning didn't really move the euro at all. So we're sort of moving down. We've given up that spike. We went to 116. There we are. That spike to over 115 and over 116 last week. We've given that back up, and again yesterday we've given that up. So, but again, here on the daily time frame, it's very bid. The 20-day now at over 115 itself here. So 114.25 for the 20-day moving average, and the 50 days down here at 113.45. So euro dollar still remains on track and holding now for its fourth consecutive day over the key 115 area at 3-year highs. for euro against the dollar. If we got the monthly, see the monthly charts. It's not going to do it. Yes, it is. There we are. We were last at this 115 area, as we showed last week, back in November 2021. So 3-4 year highs, 3.5-year highs for euro, dollar, and the trend remains very much set to the upside. So a bit of a down day today, but it looks like it's turning green again. Let's just come down to the 5-minute chart. There we are. The data's obviously popped. We went to 115.80 as the data has come across the terminals. Let's have a quick look, and it's come in negative, quite significantly negative. So is this a story of the tariffs starting to bite? Well, maybe. Remember, inventories were and retailers front loaded a lot of imported stock, and so they may be tightening their belt, but that's quite a significant decline. It was expected to decline, but that's more than double what was expected. Positive last month, and a negative for the core number as well. So we strip out the periphery, and the core is at -3. That's the worst reading for a while. You can't really tell on here because it's got this. I sort of zoom that in. There we are. A bit further. Sorry, no, I didn't mean to do that. I meant to move it that way and zoom in. Sorry, let me just play with this. Let's just go back to here. No, let's pull it forward to here. And there we are. You can see it's a wee bit. Yeah, that's the COVID decline, and we've been ticking up. As we move to now, so it's been relatively flat on a monthly basis. So that's quite a surprise, negative surprise. If we look at the headline numbers, what's even more dramatic than the core, you can see quite a decline here from the euphoria we had at the beginning of the year in December and January. The pitch lower in February. What was a pitch higher for the spring as importers front-loaded stuff ahead of the tariffs. So April was positive. We had a negative May and also a negative June now. So that's again more signs that the consumer may be waning. We've had this signs of the sorry, just get rid of that. We had signs of the jobs market cracking, cooling. Use the phrase how you like, but definite signs there, and that's quite a significant decline for retail sales. I mean, it's could be related obviously to Easter being early this year, but it's reading. But anyway, we'll see. Falls negative 0.9%, was expected to fall 0.5%. The key thing was that we were positive, both the core and the headline, last month. So we'll see. Obviously makes sense why the euro spiked initially to that 115.18. So that's perhaps our upside target for the rest of the day. 5-minute chart has it was sort of sideways, wasn't it, really? Yeah, there we are. So on the hourly chart, we got support at the 50-hour support. So we've got big support today at 115.50, as you might expect. And we're angling sort of bias to the upside. The break of 116, I've actually got 116 on here for some reason. I'll put that on because there's a key line. Put that on as a straight line. Make it 2 because it's 116. Let's put it in nice and clear. 116. That's the upside target many would be looking for. Perhaps not today, but who knows? 115.62. So we are biased to the upside. Just about. It's not really moving much, but it's looking like there may be some we could continue, but to move sideways. Here on the hourly chart, there's nothing happening. We're very much in a sideways mode. 49.97, flat on the MACD. But supported by the 50-hour, so we have to you'd have your support down there at 115.56 and trying to tick that higher. So it's flattish 1 hour, like a bit more action on the 30 minutes, but not much more. I wouldn't have thought. There we are. It's the 20 periods providing support, but again, it's sort of crushed between those two on the 30-minute, 15-minute traders. They were positive, negative this morning, positive earlier. There's the high from the data, 115.80. That's is that going to get tested again? Doesn't look like it. So as our support, 115.63 and 115.60. 115.60 is your sort of stop loss area here on the 15-minute time frame. But again, it's been positive. It's held. So relatively positive still at the moment, but it may taper off as the US traders come on board there on the 15-minute time frame. But 1 hour is marginally positive, 15-minute more so. 5-minute will be a bit more. There we are, a bit more action there. So short here into there. There we go. Long here, and then out here. So it's a flat move there. So really not a lot moving on that data. Obviously more exaggerated there on the 5-minute time frame. So dollar remains under pressure, but it's had a bit of a better day. Not fantastically better. There's not a great deal of data today. Obviously, it's all eyes on the geopolitics, particularly what comes of the meeting. I say Trump left Canada early. It was carrying on today, the G7 summit meetings of major political leaders around the world, and he's gone back. There's a national security board he's called on as he got back to Washington this morning. So perhaps more to come later. The key thing that as I said earlier, was this warning about people to leave Tehran. So and as ever in these conflicts, it's the civilians that get caught up in it, and it's civilian deaths rather than, as well as obviously the some of the military figures that Israel hit on Friday, but certainly it's the civilians that have been caught up in most of it. So there we go. There was quite a significant move down. So that's now looking to go. That's gone that long bias long here on this 5-minute, looking like it may want to sell off and pick up on the dollar. Maybe some news coming across that. Not particularly. There's been no other news since then, but that's dollar picking up a wee bit there against the euro. Sterling 135.60 has not been held post data. There's the support there for cable, 135.58. If this is going to hold a break of that, we could see the low take us to 135.45 from earlier this morning for the cable pair there on the US data coming through. Crypto this morning, 105,600, continues its decline. Sorry, it's 5-minute. Continues its decline from the spike earlier yesterday, and 105,600. I say 105,600 was a bit of a support zone through there on this 1 hour chart, which obviously takes the 104. 105 round number, 105,000 is the next downside target, but that's been short here all morning from the 7 o'clock candle, and then added to as it breached the 50-hour there at the 10 o'clock candle on the hourly time frame. So Bitcoin continues to trend lower. Next, I say cluster area is around the 105,000 round number. Really is the you see where it's pivoted through there on that one hourly chart. That's the next downside target. If we go up the time frames, the 4 hours also negative from yesterday's turnaround, and the daily time frame remains supported. We went back through the 20-day moving average yesterday, but we're down today right at the 20-day moving average. It's there. It's 105,700. Flattening out, running out of direction, running out of momentum. Next big support is the 50-day moving average at 104,000, and then the big round 100,000 back down here. A lot of fresh air down here, but this is this green line here is quite a significant support, as you can see in this big rally we've had from the spring to the new all-time high of 111,000. So potential buying opportunities have always been bought up. We're selling today at the moment. So some buys around about the 105,000, I would guess, and 104,500 as well some adding to positions. Stocks had a good day yesterday. Surprisingly, we opened positive and we held it. The Nasdaq was the best performer. It was up 1.5% yesterday, up some near 300 points. The Dow was up 300 points as well, but obviously it's a bigger number. So that was only 0.75 of 1%. The Dow. Let's just go to the indices. Sorry. And the most important of all, the S&P 500 or the SPX 500, as we call it here, the derivative that we offer you, was up 0.94 of 1% over the key 6,000 level, and it held it yesterday. So Friday's worry took us into the 20-day moving average during the day. We closed a bit higher, and yesterday we bounced back to close at 6,033. However, for me, I would like to have seen it close a little bit higher, another 5, 10, 20 points, something like that, above that resistance area. You can see that nice and clearly there on our charts. 6,038 is where I've got that line there. Hope you can see that. And I say we closed 6,034. So positive, but it's only one day. So we'll see. Two benefits. We closed back above the 6,000 level, having spiked, closing under it on Friday the first time in 6 sessions. You can see here, 1, 2, 3, 4, 5, 6th day we were closed out. So 7th day we were back over it, and that's a hugely key area. That's just from a pure psychological moment. 6,100 is a really upside target for the S&P 500. That's a new all-time high area around there. So we are still, highly valued, or highly valuations are high for these US stocks, as money's been leaving the US, leaving the dollar so far this year. But stock markets have bounced back, and perhaps there might be some surprises to those that have tried to, sell the US stock market as we go into the second half of the year, and we might see another strong year for US stocks. But given that the Fed seem hand-tied about what they're doing with their interest rates. So 6,000 holds. We're currently at 6,011. Expect a test below that during the day. It's obviously where it closes as an end of day trader, which is where my principal cash is put to work, to be honest. So a hold of 6,000 will be positive. How low below 6,000 would be negative, but obviously my main support is there at 5,939. So I remain bullish, relatively bullish. US stock markets, even at these high valuations, are positive. Bullish might be a bit of an overstatement, but anyway, sorry, I was just looking at a Bloomberg interview with Ken Griffin, head of Citadel, to the upside here. So that remains positive. Nasdaq more so, similar pattern there. There's our 22,000 level, which we flirted with yesterday. For the Nasdaq 100, 22,200 is the next real upside target. But again, 20-day is providing support. The Dow a bit more bit weaker. The industrial stocks, because again, it's exaggerated because there's only the 30 of them. Very poor day on Friday, under the 20-day moving average. But bounced back yesterday, but again, a weaker bounce back. As I say, it was up. The Dow was, as I said, the Dow was up 0.75 of 1%, whereas the Nasdaq was up 1.5%. More than better performance, and that was some of the big stocks. Meta was up nearly 3% yesterday. It's having a really good run if you look at Meta, trade the individual stocks. So stock market's relatively okay, and holding, consolidating at these all-time highs. The doom mongers are out. It is June. Volumes start to fade off, so some profits might be bagged. There's still some big holiday seasons to come, so some of the big players might want to take some of the money off the table before they go away and holiday, switch off everything. Even the big players switch off their terminals. I know a lot of you don't believe me, but they do. They switch off completely. Anyway, stocks relatively robust. Here in Europe, DAX at 23,500. 5-6 day decline under the 20-day moving average here last week, and then we followed through again on Friday. Obviously, the weakness again, a weak bounce, a bit like the Dow yesterday. So that remains negative under its 20-day moving average. Next support, 50-day moving average at 22,900 for the DAX. If the 23,000 level, hugely psychological area, and for the DAX on the way up is breached. So DAX looking negative, and the FTSE in the UK 8,050. Remember, we got stopped out on that one within pips of getting to our target. It then got with just a few pips under our stop loss. This is from last week. But that's, as I said last week, that is trading, my friends, isn't it? And we got back to the target area again yesterday, and we're back up again today. So the FTSE remains above its 20-day moving average, unlike the DAX, and sort of held up. There was that official signing of a bit of papers here between Trump and Keir Starmer yesterday at the G7. They actually dropped the documents. I don't know if you've seen any news coverage of it, but they dropped the documents. Starmer bends over to pick it up like a little naughty schoolboy, as the old man had dropped them. But anyway, that's been signed, and he said something along. Trump said something along the lines, "I really like the Brits," blah blah blah, or something. But dearie me, what to do? So FTSE, big support, the 20-day moving average at 8,788. So 8,778 is my major support. This remains bid as well, and I'd like to see a break back to the 8,900 and higher. This is going to continue up, but again, as I say, we are in the summer months now. Volumes go down, then we can have sideways action. We can have some volatility because there's not much liquidity, or the liquidity slows down a wee bit, but it's the volumes really that impacts liquidity and movement as well. So stocks remain relatively okay. Gold we had a look at earlier. Main player in what's going on between Iran and Israel is obviously the oil market. 72.60 for WTI. This morning, big sell-off yesterday. Back crashed through that $75 handle. But again, in the longer term, it remains a bid, to be honest. If you'd, well, I suppose it is quite a volatile Friday and yesterday. Big candles compared to what's been going on. You'd see there's probably something going on. But, if you've been adding to your position here, technically, as it went long here and then here, you would have added there, you'd have added there on Friday, purely technically, because of the size of the candle. And you might have had taken some profit off at $75, but your upside target is that 77.50 that we spiked to after the news of the attack took place. I mean, we could come down quite significantly as well to the 70 level is obviously key, and then that 68 level we'd been playing with for many months as well. But again, technically positive, the 20-day crossing the 50-day, and the 20 days all the way down there at 66. So we could easily come back to the 68, 66 handle as well. But at the moment, we are bid still on the oil market, where the situation between Tehran and Tel Aviv goes from here is anybody's guess to an extent. There's the argument that Netanyahu could go for it. He's got a weakened opponent that he's hated for both politically and personally for all his life, basically. And the Iranians have said, some Iranian politicians talked about wiping Israel off the map in the past. So, and how many, there's a question about how many missiles the Iranians still have left. He's talked about regime change. Netanyahu, Trump hasn't talked about that, to be fair to him, but he has talked about wanting a deal with Iran, and it's only in Iran's favor and the regime's favor if they do a deal with the US, and that's the key pivot point. So that's really what he'll be chatting with his advisors and generals about today, no doubt, and where we go from here. But obviously, it's very serious. Israel is a nuclear power. The Americans are saying, and as he said in his Truth Social post, Iran cannot be a nuclear power. And there's lots of other nuclear powers in the region, Pakistan, India as well, not that far away. So, how much impact the Omanis and the Qataris can have will play out. Saudi's obviously a key influence as well. Obviously, the Turkey's been in the loop as well as a meeting point. So, but we'll see if the talks continue or the missiles continue or both. Obviously, we've still got the situation. Sorry, I shouldn't scoff like that. Still got the situation, the terrible situation in Ukraine, and the hugely humanitarian devastation that's going on in Gaza as well. So lots of scary geopolitical issues going on. Markets seem to have taken it in their stride, as they do from time to time. But these oil markets seem set, but don't be surprised if we can come back down quite quickly as well if there's a sudden cessation and a sudden supply glut appearing, because if obviously Trump wanted cheaper oil, he doesn't want it back at $75 a barrel. He'd much rather see it down at $55 a barrel as we've gone to 60, might be the pivot point area for later in the year, but we'll see where we go. So there we go. So major news today was that, let's go back to the calendar, was the US retail sales numbers. Sorry, let me just update our calendar. I thought I had. Let's come back to taking everybody in again. Where are we? Retail sales. Here we are. There's that ZEW, much better than expected at 47.5. And yeah, I mean the other side data, we didn't see that on our Forex Factory calendar. With the other side data, the supporting data from ZEW was also positive, much more positive than expected as well, especially the sentiment for June. So core retail sales much weaker than expected. Import prices flattening, actually better, not as bad as expected. So that's interesting as well. From certainly from an US admin point of view, the real data is still not, although this is a weak number, it's somewhat to be expected. It's much weaker than expected, but it's the first one really. Whereas these numbers are better than expected. So yeah, overall, it's not as bad as the first reading, perhaps, which is probably why the euro or the dollar came back. We saw that move in the euro, didn't we, when we had the euro chart on, to the downside of the euro here, 115.52 now. It's the 5-minute chart, wasn't it? We were looking at it as a sudden spike down the area. So yeah, the initial data took us to 1580, and it looked like we were going to continue to move over. But more grinding of that data, the detail of the data was actually not as bad as expected. So dollars come back on that, and we're at 115.55 area again now. So we're back into this 115.50 zone. So dollars picked up from that weaker than expected headline retail, but the data wasn't as bad. So that explains that move subsequently to the data actually coming out. So it's been sold off. So the headline, sold the dollar, and then we've, the details been assimilated, and we've moved up for the dollar. So there we go for Tuesday the 17th. I hope you're all well, your trading's going well. Anything you want to have a look at, guys, obviously stick it in this chat box. We'll have a look at a particular asset. I only talk about the majors because that's really all most people out there trade. We had a couple of trades last night which are closed. Well, one closed flat and one's still open. We had we had a losing day on Monday. Where's my trading strategy? We had 3 trades from Friday night. So we had that winning. So far this month, we're up 678.9 points, or we were. Last week we were up 453 points. Yesterday, from Friday's 3 trades, they all ended up losing. I think I said to you yesterday, I'm not quite sure. It must have been manually doing it on a Friday night. Why I took the Euro Swiss trade, I don't know. Stop loss is too close, but I shouldn't have taken it. But anyway, it's 25 points off the table. And late yesterday, the Kiwi CAD also hit its stop loss. Last night, we were long CAD yen and pound yen, and both came within a smidge of their targets before they were closed out. So I looked at these about 7 o'clock this morning, pulled the stop loss up to entry, and I was closed out on both of them. CAD are probably is that actually, I'm saying I'm stopped out, but I'm not sure that might still be on the CAD now. I'll have to check on my actual trading station, which is over there. But if you look at these targets, 106.89. If we just go back to the pound. Where are we? Pound. I did mark it up on these charts. We came within. Let's just take this up to the hourly time frame. That's where we got in last night. 10 o'clock time here. We got filled here at 96.70.37, I think it was. But again, it's another one of those days, and that's what happens. Like with the FTSE yesterday. There we are. We were within. I think we got to 87 or 84. And our target was here at 87, so within 3 pips of target. I looked at this at what time was it this morning? 7-ish o'clock. I think I'd pulled it. I think we were still positive at this point, and I'd pulled the stop loss up. I haven't done it on this chart, but I'd pulled the stop loss up to entry, and then got hit and stopped out. So that's closed flat, basically. That's a no win, no lose on the pound yen. The pound CAD, a similar situation though. If you look at the pound CAD, there's the target again. With a smidge. We have been stopped out, yeah, because it was where's my 7 o'clock candle? That was positive 7. Oh, this is the 30. Anyway, it's been stopped out also at entry. So we are down so they're both closed, and they neither won nor lost, so they're flat closes here, CAD yen and pound yen. But again, it just shows you, trading is trading. So CAD yen had a target of 106.89, and there we were, 106.89, and this got to a high of, I don't know, it was not quite filled. There we are. It looks like it's got to 89, but the sell position wasn't filled here at 1:45 in the morning. But that, say, guys, is trading. I don't think, the brokers knows where my target is, or a broker knows where my stop loss is. There's too much going on. There's too many trades placing. These are just big, clever computers trying to fill all these orders that are out there in the marketplace, and you just got to take it on the chin. And if you can't accept losing, go and do something else, because trading won't be for you. But if you can, you follow some rules. Proptrade.com is a great place to either get started or to continue your trading journey. 1 and 2 phase approaches. You can, scale up to these, million plus, 5 million plus challenges. Our standard challenge is the most popular. It doesn't mean you have to take it. It's 25,000 is still the one that most clients buy, but you can start from as little as $55 for a $5,000 account. And if you're new to us, new 25 gets you 25% off that $55. So you can start from as little as $40 to give you $5,000 worth of equity. If you're only going to trade one asset or one particular start, start with your $50. But if you've got a few $100s to get going, I'd recommend you have a look at the 50,000 account. It gives you much more lot size to play with, much more equity to play with. It's $250 with an $80 discount. If that's too much for you, 25,000 is a nice size account as well. I'm not allowed to tell people how much you should be starting with, but an FX account, a $25,000, $30,000, $50,000 account, that's the sort of size you want to actually make some money, to actually change your life. You want that sort of capital. Most people haven't got that, and most people work to it. But the beauty of the prop trade is that you can play with that sort of account on these simulated accounts, on these not demo accounts, but simulated accounts with real profit and loss situations. You've got to follow the rules, and that's again a huge benefit, I think, of the prop trade business, full stop, whether it's the proptrade.com or any other prop trade. But look at the details. What differentiates us from lots of the other new companies out there is we've been around the block. a few times, some of us more than others, and we know what we're talking about. We've seen all the pitfalls. There's no funny rules in there. We don't like you risking more than 3% of your account. That's all we'd say, because it keeps you in the game. That's most people get really uptight when, oh, why not? I want to go gung for broke. Well, there's no consistency rule. We don't have that. I mean, lots of other prop companies do, but keep less than 3% risk on your account, and it keeps you in business longer. That's the most important thing. So don't you see that as a negative. So if you can do that, you do it with your funded account. You get your challenge fee rebated, and then any profit you're making on your funded account, every Friday you can start taking money out, real cash, real dollars, real crypto out of your account. 80% of it start off with 90% if you're trading with a pro account, or you see here 90% with a pro account. The stats are a bit tighter for pros, but for you, and we're all here to help you, honestly, because if you're successful, we're successful. We want to do this properly. There's been lots of scammers, there's been lots of sharks in this business, but we're doing it properly and openly and transparently. So come and join us, my friends. On that, I will leave you today, Tuesday. Enjoy the rest of your day, and as ever, as I always say, may the pips be with you. I'll be with you tomorrow evening for the decisive FOMC announcement. Nothing really exciting out of that, potentially from an interest rate point of view, but really it's all about the dot plots. What is the expectation, and how did the discussions go, and how does Mr. Powell perform at the press conference later on? So see you tomorrow for the Fed. It's 7 o'clock my time, 1600 GMT. Sorry, 1800, I should say, not 1600, 1800 GMT, 6 o'clock GMT, or Universal Standard Time. So enjoy your Tuesday. I'm off to get some lunch, and take care, be good, and I'll see you all again tomorrow. All the best, everyone. Bye-bye.